If you're a retiree or close to retirement, December can quietly create avoidable tax surprises in January and April, not because you did something wrong, but because deadlines and income timing collide. This video is a practical education-only checklist of what to review before the year ends so you can reduce unpleasant surprises. Disclaimer, this video is for educational purposes only. I'm not a financial advisor, I'm not a CPA, and this is not personalized financial or tax advice. Tax rules are complex, your situation is unique, and you should verify everything with qualified professionals and official sources. Let's start with the big idea. In December, you're not doing taxes. You're rechecking the levers that can accidentally push you into a higher tax bill, often without you realizing it, until it's too late. Think of it like a pre-flight checklist. You don't do it because you're expecting a crash. You do it because it's smart. Here are the most common December tax traps, explained in plain English, with a checklist you can follow in one evening. First trap, assuming my income is fixed, so my taxes are fixed. Retirement income feels stable, but your taxable income can jump around. One extra distribution, one big capital gain, one unexpected bonus, one side job, one large withdrawal for a home repair. Suddenly, your year looks different on paper than it felt month to month. So checklist item number 1 is write down every income stream you had this year: Social Security, pension, IRA or 401k withdrawals, interest and dividends, part-time work, rental income, anything else. You are not calculating tax yet. You're just making sure you're not forgetting a source that will show up on a form later. Second trap, the I'll deal with it later withholding problem. Many people wait until filing season to discover they underpaid during the year. Your goal in December is not perfection. Your goal is to avoid the kind of underpayment surprise that forces you to scramble. Checklist item number 2. Look at how much tax has been withheld so far and compare it to last year OS total tax. If you had a higher income year, sold something, took a bigger withdrawal, or had unusual gains, it's worth asking, did my withholding keep up with my reality? If you don't know how to check, that is a great question for a tax professional because the time to fix it is before December 31st, not after. Third trap, required minimum distributions. If you have pre-tax retirement accounts, you may have an annual minimum amount you must withdraw once you reach the required age. Under current rules, the RMD starting age is 73 and an increase to 75 is scheduled for 2033. Checklist item number 3, if you are at RMD age, confirm whether you've taken the full amount for the year across all the accounts that count. This is one of those areas where almost can still create a problem because the rule is tied to the calendar year. And if you take withdrawals for living expenses, don't assume you automatically satisfied the rule. You want to confirm it explicitly. Fourth trap, confusing cash in my account with taxable income. This one catches retirees constantly. You might feel like you didn't earn anything, yet your taxable income rises because you sold investments, took a distribution, or received dividends. Checklist item number 4, check for capital gains and dividends. If you have a taxable brokerage account, December is when funds can distribute capital gains, and that can increase your taxable income even if you didn't sell anything yourself. The action step here is simple. Review your brokerage, year-end summary, or online tax section, and look for realized gains, dividends, and any big distributions. Fifth trap, the I'll harvest losses later. Mistake. Tax loss harvesting is one of those phrases that sounds fancy, but the concept is simple. If you have investments in a taxable account that are down, selling them may create a loss that could potentially offset gains depending on your situation. Checklist item number 5. If you had gains this year, ask whether you also have losses that are sitting there unused. You are not deciding what to sell because a YouTube video told you to. You are simply checking whether you were accidentally paying tax on gains while ignoring losses that might reduce that impact. The safe move is to review it and discuss it, not to blindly trade. Sixth trap, letting a Roth conversion idea turn into a December panic. Some retirees hear about Roth conversions late in the year, then rush into a decision. Conversions can have benefits for some people, but they can also increase taxable income in the year you convert. Checklist item number 6. If you're considering any conversion strategy, treat December as planning season, not panic season. Your December action is to estimate your taxable income and ask, do I have room to do anything intentionally, or would that push me into a tax bracket or affect other costs? The key word is intentionally. The trap is accidental income stacking. Seventh trap, charitable giving without documentation or without a plan. Many retirees are generous in December, but the tax side only works cleanly when records are clean. If you donate, you want receipts, dates, and correct names. Checklist item number 7. If you made charitable gifts, gather documentation now. If you're planning a gift, decide whether you're giving cash, items, or appreciated assets, and make sure you understand the documentation requirements. This is not a do this instruction. This is a don't to wait until March to hunt for receipts instruction. 8th trap, forgetting about healthcare-related tax items. Even in retirement, healthcare expenses can be a major line item, and certain accounts or deductions can depend on timing and documentation. Checklist item number 8. Create a single folder, digital or paper, for medical bills, insurance statements, pharmacy receipts, and any premium notices you might need. Even if you end up not deducting anything, having clean records protects you from stress later. 9th trap, the retirement account contribution confusion. A lot of people mix up what can be done by December 31st versus what can be done by the tax filing deadline. This isn't the place to memorize every rule. It's the place to avoid false assumptions. Checklist item number 9. Ask one clear question. Is there anything I am eligible to contribute to for this tax year, and what is the real deadline? If you still have earned income, a conversation can matter. If you don't, it may be simple. Either way, clarity beats guessing. 10th trap, mismatched personal information and missing forms. This sounds boring, but it's one of the most common time wasters in tax season. A wrong mailing address, an outdated beneficiary form, or a missing tax document can delay everything. Checklist item number 10. Log into the accounts that will issue forms, Social Security, pension portal, brokerage, IRA custodian, and confirm your address, email, and tax document delivery settings. If you prefer paper, request paper now. If you prefer digital, confirm you can access it without resetting passwords under pressure. 11th trap, gifting money to family without thinking about the paperwork side. Many retirees help adult children or grandchildren in December, and most of the time it's done with love and zero drama until paperwork questions show up later. Checklist item number 11. If you gave significant gifts, write down what you gave, when you gave it, and why. This isn't about fear. It's about keeping clean records so you can answer questions later without relying on memory. 12th trap, ignoring state taxes. People focus on federal taxes and forget that states can have very different rules, especially around retirement income. If you moved, worked in multiple states, or changed residency, your tax picture can change even if nothing else did. Checklist item number 12. Confirm your state situation for the year. If you moved, make a note of the date you moved and keep any documents that show where you lived. This is an area where a short conversation with a professional can save hours later. Now let's turn this into a simple December routine you can actually follow. Pick one evening, set a timer for 45 minutes, open a notebook or a notes app, make 3 headings: income, accounts, paperwork. Under income, list every income source you had this year and whether it was steady or one-time. Under accounts, list every retirement and brokerage account and whether you took withdrawals, had gains, or need to check distributions. Under paperwork, list what you need to gather: charity receipts, medical records, brokerage summaries, pension statements, and any letters you received that you usually ignore until it's too late. If you want a final sanity question that catches most surprises, it's this. Did I do anything this year that created a one-time spike? Selling investments, selling property, large withdrawals, a big bonus, a side hustle, a big distribution. If yes, that's your signal to be extra careful with the checklist. And here is the emotional truth. The goal is not to pay the least tax. The goal is to avoid preventable stress. Most retirees don't want clever tricks. They want predictability, safety, and fewer surprises. If you want, comment checklist and tell me which one you want a deeper video on. RMDs, capital gains distributions, charitable documentation, or the withholding check. I'll build the next episode around the topic you're actually dealing with.